today's trade. Let's get talking about earnings now. Remember that HDFC kicks off earnings season. It comes out with earnings on July 11th. To talk about all of what earnings can throw up this time, Prasad Koparkar of CRISIL Research joins in. Hi Prasad, thanks very much for taking the time out. Just to focus on a specific sector before we get to the overall earnings season, what exactly are you expecting from the banking space this time round, especially on asset quality? Do you expect restructured loans and that sort of trend which we saw in the previous quarter to continue this time round?
Yes, I think what we are saying is that in the banking sector, asset quality pressures are going to continue. We have seen the overall NPAs going up to close to 2.8, 2.9, and we believe that in the next 1 year they will go up another 30 to 40 basis points. So we see both in terms of NPAs as well as restructured assets, there will be continued pressure.
Okay, let me begin at the beginning. Prasad, your report says that aggregate sales growth in the first quarter will rise by only 14%, lower than the 17% increase in the quarter that just went by, and of course 17% even in the year-ago quarter. Right. How does this, pan out sectorally? Are there some sectors where aggregate revenue actually declines?
Yeah, there are sectors where things are actually declining, like in, I think, shipping, auto also. I think if you look at the first 2 months, there is a negative growth in terms of volumes. So clearly airlines, hotels, auto, especially passenger car segment, we are seeing very significant pressure. I think housing is another sector where we are seeing absolutely very, very marginal growth in volumes. Prices are also not going up. So these are the sectors we are seeing very, very sharp deceleration in revenue growth.
Okay. What about margins? In margins, actually, you have a slightly benign picture. I assume that's because of rupee depreciation. You have said that margins, EBITDA margins would actually increase in the first quarter to between 19 to 20% compared to 19.1 in the quarter that just went by, and actually 18% even in the previous quarter. So somewhat improvement. Where would these margin improvements come? Which sectors or companies?
Right. Let me just clarify. Actually, margin improvement on a year-on-year basis is not there. So year-on-year basis, actually, we are saying about 150 basis point decline. Okay. But on a quarter-on-quarter basis, yes, margins will be flattish. There might be a small uptick of 30-40 basis point, but it is very, very skewed. There are few sectors which are really driving it. But out of 26 sectors that we studied, almost 15 sectors will still see, even on a sequential basis, a marginal fall.
Prasad, one thing you've highlighted is obviously balance sheet stress, because interest costs are expected to be the highest in the past 12 quarters, or rather they are expected to continue the uptrend or the pressure. Hence, in terms of bottom line expectations, what are your expectations in terms of possibly, a loss-making P&L this time round, and which sectors could we expect that from?
See, you're right. I think interest costs are going up significantly, and on the other hand, there is one compensating effect, which is also what we have spoken about, is the depreciation. Given the very, very sharp deceleration in investment cycle, we are seeing depreciation costs are, as a percentage of sale, are actually at a 10-year low. Okay. So it is compensating to some extent. And given that the EBITDA margin pressure we are seeing, it is abating. I won't say, it's now going to turn positive. But if you look at last full year, almost every quarter, we have seen a year-on-year decline in the range of 200 to 300 basis point. We believe that this year that range is going to be much narrower, somewhere maybe about 100 basis point or so.
Okay, Prasad, a slightly out of syllabus question. Your report is speaking about the first quarter, the quarter that will start reporting numbers. Right. How will you extrapolate for subsequent quarters? Will revenue growth continue to be 14%? Will margins continue to improve? Do you have a number for the full year?
See, full year we don't have a precise number, but my sense is that, actually, if you look at what has really been holding on the revenue growth for last 1 year, it grew at about 17-18%. Previously, it was growing at about 20-21%. Was really the consumption, because the investment cycle had slowed down. Our sense is that, there will be strain now even on consumption, given that consumer sentiment is getting impacted. Inflation is very high. So the private consumption, which is almost 60% of the GDP itself, will come under pressure. Even I think early signs on monsoons are not too good. You have almost 25% below normal now in June. So my sense is that revenue growth is very unlikely to surprise on the positive side.
Okay, you have a working number for EPS growth for the current year, say a Sensex EPS number that you're looking at?
No, we don't have a number on the EPS, but at the EBITDA level, we have a sense that unlike about 200 basis point decline that we saw, we will see close to about 100 basis point.
All right, small mercies. Thanks a lot
Thank you
for joining us, Prasad, with all those details.